Qualcomm just hit a fresh 52-week high of $209.23. The chip maker is up roughly 8.5% today in a single session, and the catalyst is in earnings. Earnings already happened a week ago. The real story is a partnership almost nobody saw coming. Here's what happened. Reports broke that the San Diego chip maker is teaming up with OpenAI to build an AI-native smartphone chip. Mass production is targeted for 2028. That's not a typical OEM deal. That's a bet that the next phone category, the one that replaces the iPhone-era app grid with an always-on AI assistant, runs on their silicon. Wall Street took the hint. The stock blew through its prior ceiling and printed a new yearly high in morning trading. Market cap is now sitting north of $210 billion. Year to date, shares are up 13.3%. Over the past 12 months, total return is 36.6%. For a company most people still think of as a handset royalty business, that's a serious re-rating. So let's break down what the market is actually pricing in. Three forces are stacked on top of each other right now. First, the data center. On the April 29th earnings call, CEO Cristiano Amon dropped a line that changed the whole narrative. He confirmed the company will start shipping custom silicon to a major hyperscaler before the end of this calendar year. Hyperscaler is a polite word for one of the 4 or 5 companies that buy chips by the billion. Amazon, Google, Microsoft, Meta, Oracle. One of them is now a customer. Initial shipments hit in the December quarter, and management says there's a multi-generation deal behind it. That's not a one-time order. That's a pipeline. Why does this matter? Because for the last decade, the bear case on this stock has been simple. Apple, the CFO, confirmed on the same call that their share in this fall's iPhone modem launch is roughly 20%. And there is no product relationship beyond that. Translation: the biggest customer is walking out the door. The data center win is the answer to that problem. It's the new revenue line that has to exist before Apple finishes leaving. Second pillar, automotive. This is the quietly explosive part of the story. In the second quarter, automotive revenue grew 38% year over year to a record $1.326 billion. The company crossed $5 billion in annualized auto revenue for the first time ever. Amon said on the call they expect to exit fiscal 2026 above $6 billion at a run rate, and the next quarter guide is for roughly 50% year-over-year growth. Read that again. 50% growth in a segment that's already past $5 billion. That's not a niche bet. That's a second business hiding inside the chip business. Third pillar, AI on the device. The Snapdragon X2 Plus chip with 80 trillion operations per second is now powering Windows 11 Copilot Plus PCs. The IoT segment, which bundles AI laptops, smart glasses, and industrial chips, hit $1.7 billion in the quarter, up 9% year over year. These aren't the hot lines on the earnings call, but they're the ones that turn this into a platform story instead of a phone story. Now here's what people miss. The Q2 numbers were technically a mixed beat. EPS came in at $2.65, beating the $2.56 consensus. Revenue at $10.6 billion edged the $10.59 billion estimate. But Q3 guidance, $9.2 to $10 billion, actually came in below where analysts wanted it. The reason was Chinese handset OEMs cutting build plans because of rising memory prices. So why did the stock keep climbing through that miss? Because Amon made the Hyperscaler announcement on the same call. Shares went from down 5% in after hours to a peak gain of 17%. By week's end, the name had gained roughly 34% over the past week. Today is just the next leg. The reason the rally has legs goes back to something that's not even on the calendar yet. June 24th, Investor Day. That's when management is expected to actually quantify the data center opportunity in dollars. Right now, the market is pricing in optionality. After June 24th, it could be pricing in a number. And once there's a number, the multiple either expands or it collapses. One more thing worth knowing. The company returned $3.7 billion to shareholders in Q2 alone. $2.8 billion in buybacks, $945 million in dividends. Trailing free cash flow is around $9.6 billion. The dividend yield sits near 2%. So while you wait for the data center thesis to play out, you get paid. That changes how investors size positions. Here's the bottom line. Today's 9% move isn't about a chip deal in 2028. It's the market connecting three dots. The handset business has a clear exit timeline. Automotive is already a $5 billion business growing at 38%. And there's a hyperscaler check about to land in December. Put those together and you get a re-rating from a handset royalty stock to an AI compute platform. That's what's happening on the tape right now. Whether the June 24th number validates it, that's the next test. If it lands, the $209 high stops looking like a peak. It starts looking like a base. If a quiet semiconductor name turning into the next AI platform story sounds like the kind of breakdown you want more of. More breakdowns like this if you want them.